Okay, so if this were any other day, I'd be panicking right now. I really would. I'd be like, oh my gosh, we've had so much drawdowns lately. It's just horrible. So if I did not have a plan and a strategy, I'd be feeling really, really bad today. And it was cool last night as I was sleeping. I went to bed like 7:30 last night because I'm practicing for going to bed at 7:30 tonight. That's right. My plan is to go to bed at 7:30 tonight and just get up refreshed in the morning. Then I'll get on Facebook and see if all the Georgia fans are going nutso. And let me mute all. No. So see if the Georgia fans are going nuts, or if we have our Matt, what would this be? 18 or 19 national championship for us? I can't remember.
I think 19.
This will be 19 for us. So, I just don't think I can watch the game. I watched the first one between Alabama and Georgia. I just don't think my heart can take it. So I'm going to wake up. It's kind of like when I buy a lottery ticket, when it gets up to like 600 million, I'll buy a lottery ticket and then I'll go to bed and I'll pretend that I win the 600 million. So I go to bed like thinking about all the little things that I'm going to do, which basically is buy a few goats and maybe an extra cow or donkey. So anyway, good morning, y'all, or good afternoon. So without AIM, we have no hope. Without AIM, we are in terrible, terrible situation with our account. But AIM gives us hope. So let me just show you what AIM is doing today, because as we look at the AD, it is really negative today, negative 381, really negative. And you see it keeps making the daily low on the AD. Then we see the market is down itself. The mini's down 1.6%, NASDAQ down 2.11%. And let's just look at the overall market. We're below the overnight low. We're below the cash open. We're below VWAP. We're below the 15-minute opening range. We're below the hourly mid band. We're below the overnight high. We're just below. And do I care why we're down? No, because I know what everybody's saying. They're raising rates, and that's bad for tech. It's good for financials. I got it. And if my window of my investment horizon was a year or two, I'd probably be flipped out, but I'm not flipped out. So to me, we're looking really, really good. So let's look at remember, Lucello said we need volatility in whatever we trade. And certainly we're getting volatility here. So let's see where we look like on our volume profile. Keep in mind, this is a volume profile and a market profile. Our green lines are market profile. Our stuff over here is volume profile. If you don't understand that, that's fine. Don't worry at all. Now check this out. Here's where the E-minis are. The E-minis went from oversold to overbought, and now they're into a new fair value range. Where would we anticipate price to go in the coming days? Well, since it's fairly priced, you would think, well, it's probably going to stay within this fair zone here, right? Problem is, we see all of these gaps up here, and we see market or volume profile point of control up here. So it wouldn't surprise us to see a fill of those gaps, to see a fill back into that area. But it really doesn't matter. As long as you have your plan and your strategy going forward, I think we're just fine. So let's look at the NASDAQ, which is causing the account so much pain today. See what that looks like. NASDAQ is, see if we've got any support coming up on this little drop down. So it went from a fairly price zone here, went to overbought. Now it is in an oversold area. Now, if it stays down here, I need to duplicate this drawing, and I'll have to draw it down here. But right now it is an overbought scenario for the fair value zone below. So at some point, maybe before tomorrow, or I probably need to show you how to do that. It takes me a while to figure it out myself to duplicate this. Why don't we try and go ahead and do it? Just do it, Bob. Let's see if we can do it. So let's go to duplicate drawing. There we go. So we got a duplicate now. So now we need to move this little puppy down. So let's move this down. See if we can fix it. There you go, Bob. Old Bobby, old pal. Old Bobby, old Bobby, old Bobby. Let's see what this looks like. So that's overbought. Let's see if that'll do it. Yeah. Yeah. So we'll drop it there. So that gives us a fair value zone, an overbought, and an oversold, and a fair value zone below. All right, so everybody saw how I did that, right? I just moved the 50% line from up here on the other chart down here. So now we've got it going way, way, way on down. So we're looking really, really good. So you can see there's an area of a bit of support here at this green line as it decides, do I want to go on down into the next fair value zone? So that is support until it isn't, and right now it is. So it's kind of cool. All right, so let's look at our skew driver, see if our skew driver is giving us anything extreme. Skew driver today is at about 76, I think. So there it is, 77.91, 77.92. So we'll say 78. Skew driver is 78. So today is 110.22, 110.22, 78. Still gotta fix that. Pucka, pucka. There we go. So skew driver is going back up. Remember, we thought that the market would go neutral to bullish. We were wrong, and it's going back up here. So that's kind of an extreme. Now it very well may go back up to 99, 95, almost to 100, right? And if that is the case, then surely we'll see a move up in the market. So, you know, what is this? This is, I would say, neutral to bullish, but keep in mind, it can certainly do this. And when it does this, we've seen that's been an automatic. So it's not much of an extreme now to say, well, it's definitely tomorrow the market's going up. I can't use it like that. But at some point, you would expect a reversion to the average, and that would be, you know, an up move in the market. So we'll see. This is one of our tools that we really don't even need, actually, because the way we trade, we're just relying on our little algorithm to tell us what to do. Now, this is why I'm so excited. So TQQs are down big today, y'all. So finally, you and I have a signal by the algorithm to do something. Now, keep in mind, this is the hardest part of the whole program, is staying disciplined. And, you know, it's down. So a lot of you are sitting there going, crap, why did Bobby get me in this TQQQ mess? I mean, we're down big this year. Well, that's what we want. Well, it's not what we want to be down, but we do want the market to move up and down so that we can accumulate shares. Remember, we're trying to do an empire here. So to do an empire, we're going to have to buy more shares. We've got 191 shares in this account, and this is saying to buy 14 shares. So let's do that. Let's go over to TQQQ and buy 14 shares. TQQQ. Buy 14 shares. When there's blood in the street, that's when we got to act, even though some of the blood in the street may be yours. So here we go. We're going to buy 14 shares. And so by buying 14 shares, this should help our cost basis, right? Because, you know, our cost basis is a lot higher than 134. So now we just bought 14 shares at 134.60. So let's put that into the spreadsheet. 14 at 134.60. 14 shares at 134.60. I love this because it just takes my emotion out of it. It says, okay, we don't care that you're down in your net lit, Bob. We don't care. We just want you to follow the rules. Okay, I follow the rules. TQs 14 and then put no, because that's just a signal. All look the same. So we'll go back over to our dashboard, and now it says buy 5 shares. Ignore that. Don't worry about that. Do not worry, because it said buy 5 more shares. Just take the first signal and do it. So we did it. We did our 14 shares. All right, so now TMF is also down today. So it's telling us to buy 5 shares there. Let's do that. TMF, we're going to buy 5 shares there on our little accumulation here. TMF, we're going to buy 5 shares. Alabama classes start on today's Monday, on Wednesday. So I still don't know what time I'm going to be doing my Alabama classes. We're doing an investments class, and we'll be actually trading with those guys. And I'm thinking about, if y'all be nice to them, I'm thinking about maybe bringing all of my Alabama class into our Discord. Or does that seem weird if I bring them in with all y'all? Y'all be nice to them. Because keep in mind, these are going to be kids that have never, they've never bought a share stock. They've never done anything. So y'all be nice to them. I think I'm gonna bring them in. And cancel, replace. Where's my work account? Even though we got some Georgia fans, y'all be nice to them. Oh, we got field. There we go. So 24. Let's see, we got field at 24.74 and 5 shares. 24.74. 24.74. I'm kind of happy too. I think I was supposed to have 30 in the class. That was a max. 24.74. And I've got 45 in there. So I had to give a lot of permissions for folks to get in. And I tell you, I read these professor boards, and these people hate students. I'm not letting another student in. That's what they say. I'm not letting anybody in. It's unbelievable. These kids won't take your class. Dang it. Be nice to them. Don't take your class. Don't be such a butt all the time. All right. So we bought, how many shares did we buy? 5. The memory goes, y'all. 5 of them. Got 5 of those. F. Go. 5 of those shares at 24.74. So good. So let's just see what our allocation is now. So now we have 69% of our account in TQs. We've got 21% TMF and 9% in cash. So if we were to rebalance, it tells you exactly what to do, but no need to rebalance today. We said, I think we decided on rebalancing on a quarterly basis. So no need to do anything there. So we've accumulated shares that have gone down. Now, keep in mind, I would be flipping today, y'all. I'm talking about flaking out that my account's down $2,000 today if I didn't have a plan. But I have a plan, and the plan is accumulate on down moves. Okay, I'll do it. So let's save this, and let's open the other one up now, and let's see what TQs are going for. Again, TQQQ, what's it currently going for? It's going for 134.54. So let's go buy some of them in the other account. Trade 134.54. Want to do TQQQ. Yeah, I mean, a lot of people are panicking. They're like, oh, y'all, should we get out of it? No. This is not when you panic. This is when you have, I mean, it takes stones, y'all, to be a trader. Now, we don't want to blindly do dumb stuff, but remember, we've got strategy. And strategy, you know, what do you do when it's your first year at the University of Alabama and you're losing to UL Monroe or whoever it was we lost to? You know, everything looks fine. It looks terrible. All right, so 135, what's the price? 135, 134.64. And our little spreadsheet over here says we need to buy some shares. Let's see over here. Okay, so I got to buy 14 shares over here. Buy 14 shares. 134.64. 14 shares. TQQQ. Underline here. 134.64. That's where was going. And we're going to buy 14 shares. Bobby, how come you don't have live quotes? Because this is a corporate account and I don't pay for that data. I only pay for the futures data. 134.64. But I just use Tastyworks to tell me what the price is, right? 134.64. So we're going to buy 14 shares. Make sure we're doing this right. There we go. There we go. Thinkorswim does it with 4 little digits behind it. 134, 30, 77. 134, 30, 77. 134, 30, 77. 134, 30, 77. Now I put it all in 134.30, 77. That's going to keep it just right. TQQQ. Isn't this cool? I love this. So we're buying 14 shares, just like it says, 1, 10. What if it keeps going down, Bob? I'm going to buy more. Isn't that called averaging down? I think it is. Isn't that supposed to be a stupid move? I think it is. But it's part of our algorithm, and I'm going with it. All right, TMF says to buy 7 shares. All right, let's see what TMF shares are trading for. TMF is going for 24.77, and it says buy 7 shares. 24.77. Let's do that. 477. And then I want to talk to you about something else that we're thinking about doing. It's not new, it's nothing new. It's just, should we do it? And I'll show you what we're thinking. TMF 2477. So by the ask. God, I can't remember how many it said to do. 7 shares. 7. All right, 24, what did I say, 77? 7 shares. Let's build our empire. There we go. Looks like it filled exactly at 24.77. Just double checking. 24.7699. 24.7699. 7699. 24.7699. TMF. We got a 7 shares. 7 shares, 1, 10, 22, you hit no. Now remember, when you go back here, this thing may give you something entirely different. Right now it's buy 3 shares. Forget that. Take the first one and be done with it. And if you don't want to do it daily, like I do, check it once a week, every 2 weeks, some consistency. Be consistent in the way you do it. So we've got that done. So let's see what we're doing now. So now let's look at our quarterly rebalance. So now we're 69% TQs. We're 22% TMF, and we're 10% cash. Very good. So 69, 70, 82, is that equal to 100? 70, 82, 70, 92. I guess the rounding part of it's what's running that off. All right, so we're good now. So I'm loving this, y'all. If I didn't have this today, I would be panicking. I would be, oh my gosh, Bobby, you are a horrible trader. You're an idiot. But if I'm going to buy into the algorithm and let the algorithm make decisions for me, then I kind of got to buy into it. And the great thing is, on a big down day like today, we're accumulating shares. Now, watch this. Let's show you the bigger picture. All right, so there's TMF. TMF still at the bottom of its little range. It's under the 200-day moving average. But I want to show you the SPY. SPY looks very controlled. Everybody see that? The S&P goes to the top, goes to the bottom, goes to the top, goes to the bottom, goes to the top, goes to the bottom. Everybody sees that. Now watch this one. This is the one that looks ugly today. Look at the Qs, y'all. And the TQQ is the same exact chart. Just want you to see it, just different prices, right? TQQ is the same chart. So here's what happened. It goes to the bottom, goes to the top, goes to the bottom, back toward the top. And now we have fallen outside of the linear regression channel, but it's still above its 200-day moving average. Now, keep in mind, we don't care about the Qs and its 200-day moving average, because our trigger to get out of a bullish play in our TQQs is actually based on the 200-day moving average on SPY. So we're kind of buying into the fact that, hey, so goes the market, so goes everything. And if this were to get below the 200-day moving average, what would we do? And again, it doesn't matter what happens today. We look at it at the last trading day of the month. So today's January 10th. Last trading day of the month is January 31st. So we will actually look at this chart on January the 31st. And if we're below the 200-day moving average, we have the permission. It's not required. We can hop out of TQQ for a while, right? If we think it's going to get really, really, really ugly and messy. So it gives you an opportunity to jump out. I'm not certain that I will jump out. I think I'm just going to let the algo run, because if I do get out, I still want to accumulate shares in the event that we go down. So I'm still an asset accumulator. That's how wealth is created in this country, is that we accumulate assets. We're asset accumulators. And in this instance, we have, or I have, whatever your income instrument is, I bought into TQ. Even though the world says you're gonna wreck yourself, Bob. Okay. Well, I still think we're fine. Let's see what y'all are saying. We're getting close to the 200 moving average. Yeah, we're getting close on the Qs, right? We're getting close on the Qs. But remember, I'm not even going to look at this as far as getting below this. If the Qs get below its 200 moving average, I really don't care. This is my signal. My signal to potentially think that we're in danger is on the SPY. So that's what I'm looking for. I've got the 200-day moving average here. If SPY is below its 200 moving average on the last trading day of the month, I have the permission, but not the requirement, to get out of the TQs. I don't think I'm going to do that. I think I'm just going to hope. And I think I'm going to let the algo work. Now, if I do get out, then I'm going to make a separate sheet where basically I won't tell it that I'm out of TQs. I will not tell the spreadsheet that I'm out, because I still want to accumulate these shares on the way down. So I hope everybody kind of understands that. I'd be tricking the spreadsheet. I'm still an asset accumulator, even if I were out of TQ. So I still want to take those. Those signals to buy on the way down, even if I'm totally out of it. All right. So I just want to make sure now, if any of you have not been running the AIM program and you're like, thank God I hadn't, this is terrible, Bob, then this is a great time to get into it, in my opinion. And what is my opinion? I'm just some guy actually in my long breeches today, not in my underwear, because we had to go and check on the baby goats. Did y'all see the baby goats? Oh, y'all, it's so sad though. We went out there yesterday and one of them was dead. Let me show you which one was dead. Where's my thing? I thought I showed y'all these somewhere. Where did I not put my goat pictures in here somewhere? Oh, here they are. Bless their little hearts. I can't remember which one. I think it was this one. God love him. So I still got, this one's a little girl and this one's a little boy, and this one has gone on to glory. Even though we tried to warm it up and try to get it back to health, I don't know why. I think a donkey stepped on it. And now I've got my donkeys locked out where they can't get in with my goats. All right, but everybody was doing good this morning, the ones that are living. All right, so everybody, anyone got a question on what the plan is? I mean, the plan is the plan is the plan. I'm just running the plan. All right, so then we also do something. Let's just look at our overall Greeks today. So we're down $2,100 on the day. It looks bad, y'all. We're down $3,600 on our open, and we're down $7,551 here today. What are y'all doing here watching me, y'all? We have no clue what we're doing. We're losing tons of money. That's okay. I think this account has no available buying power. Oh, God, that's terrible. If that's the case, hold a minute. I don't think that's true though, because it let me put on those trades. Let's see what we got. This will be interesting. Let's see how much buying power we've got in the other one. Yeah, it says we got negative 100 buying power. Okay, that's fine. So what we would do then is our theta is nice and thick. Everybody sees that. Our deltas for TQs are just fine. They are what they are, right? We got 217 shares. We got 213 positive delta. And our overall delta is this. So it's kind of good that you get to see that, hey, our buying power has gone down with this move down. So what does that mean? Because this is cool. That means we're going to have to close some winning trades. So let's go here and let's look at our micros. Now remember, on our 111 trade, here's some that we can close and release some buying power. So these are little black swan hedges. I'm pretty sure. No need to do anything with them. Let's go down here and see where we've got the naked component of our 111 trade. Let's just take some profits. Here we go. So here's one that we sold for $20.25. Now we can buy that thing back for maybe 215. So let's close that trade. All right, so let's go buy, and we'll try to do it at 215. See if we can close that. See if that'll give us a little bit of buying power. So instead of negative 101, it gives me 45.69. I like it a lot. Let's see if we can feel. I said, let's see if we get filled. Let's go up to 220. Nickels and dimes, y'all. Nickels and dimes. That should get us out. Bingo. All right, we're out of that one. Let's see. So that gave us, now we're back into positive net lick, which is really good. All right, let's see. I mean, not net lick, but buying power. Oh, let's close another one. Because this is part of the plan. We've got positive deltas. We've got positive theta. So it doesn't hurt us to close some of these. Let's see what that had any effect on our theta at all. Our theta is 57.66. So it went down just a bit. That's fine. We can afford to close some of these. Here, we have one that we sold for 20.50. Let's close that for 255 maybe. We'll try 255 and then we'll go 260. See? Now, when you do this, you've got a free put debit spread on that cannot lose. The overall trade cannot lose. So we're off on that. So now our available buying power is 621. I like it. That should give us enough buying power to put on a 111 trade. All right, great. Because remember, let's go to our little drawing thing. The 111 trade. Let me outline it for you. The 111 trade is this. The 111 trade is simply this. Buying put debit spread, right? For $10. And you buy it, it's a 50 wide on the put side. Okay, we're buying a put debit spread for $10. Then we're selling a naked component, a naked put for $20. So that the overall trade is put on for a $10 credit. Now, under normal circumstances, we would let the entire thing expire, especially your majority of your profits coming from that naked put, right? And we just let that expire, and the overall trade would leave us with, $10 credit. That'd be our profit. That's the way most of these work. But every now and then, if your buying power requirement is too much that you can't put on your next trade, then we have to take profits on the naked put. So if I'm able to buy it back at, so say I got a $10 credit, say now I buy that back, the naked component, for $2, like we just did, well, we'll just round it to $2. Then the overall trade is put on for a credit of $8. So basically, I've got a free put debit spread that is a hedge to the downside, debit spread, financed by the naked put. Because we never like to do debit trades, right? That's not our deal. We don't like buying stuff. And when we do buy stuff, we sell something to finance the purchase. Any questions of that at all? I just want to make sure everybody understands why I said I could close those. Because you close a negative, a short put, you close that naked put component that you've already built up all the profit on. Even on a down day like today, I still got tons of profit in. So you close that and you're left with a put debit spread that the overall trade cannot lose money. That's what we call a high class situation. All right, so let's go back today. Let's see how everything individually is doing. So we're down on TMF, we bought shares. We're down on TQQ, we bought shares. Our VIX hedge is up a little bit. Our Black Swan hedge down a little bit. Our micros down a little bit. Okay, no big deal. So let's go to the other account and let's see if we've got buying power here. Still got plenty of buying power here. Option buying power, $5,164. So the plan is to put on a daily M1 111 trade. Now, if you can't Put them on once a week. Put them on once every 2 weeks, whatever frequency that you can put them on. And if you had to say, is it better to put them on a down day or an up day? It's actually better to put them on a down day. So today would be a great day to put on a 1-1-1 trade. Why? Because you can get that NECA component way, 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 way out. All right, so where we're going to go. I go closest to 60 days without going over. Tom goes closest to 45 days. That's fine. So we'll go to the 49 days. And we'll do a long put vertical. And we will go and make this thing 50 points wide. There she goes. All right, so right now that one's trading for 1650. So we got to knock our strikes down. And pop that one down there. Keep on going. Keep on going. 1475. There's 1450. Let's go down some more. And they get hung up every now and then, so we got to move them. Down again, down again. 1325. There's 13. I'm just watching everything. Go down. This one will get hung, so we got to move it down. So now we're at 1250. Down another one. Now we're at 12. Go down another one. You got to keep your eye on this one. Make sure they get hung. Down to about 975 is where we're going to go. Look how much farther we're out compared to those other ones that we got on. So we'll go to 9. Let's go up to this one, 975. We'll bump that up to $10 and see if we get single. Bingo. All right. Then the fun part of it is now selling a $20 NECA component. So down here, way down 39.60. Now look where our other ones are. 41.10, 41.70, 4,200. So we're going to go down here and sell one. And I'll go for this one because I want to cover my commissions. So let's sell that one for 20.75. Now, here's what we really like is we like looking at our entire little thingy here. Let's just see what it looks like. Analysis. So here's our 1-1-1. Right? Looks pretty good. I call it a whale. Tom calls it an elephant, whatever you want to call it. Elephant in its trunk. This is the backside of the elephant, but I call it a whale. There's my little whale. Little spout right there. There you go, little whale. You got a little eye. So we're building this little fortress to the downside that provides a nice little downside hedge here. That's what we're looking for. What about here, Bobby? If the market goes down to 4,000, you have enormous losses that theoretically, I'm saying theoretically, should be brought up by by the Sweet Bobby hedge. Keep forgetting to call that the Sweet Bobby hedge since I came up with it. All right. So let's delete all that. Just want everybody to know what we're doing because we actually do have a plan. You say, God, Bobby, you just ragtag it, don't you? No, we got a little plan. So then we'll look over here. And we'll try to place the same trade into this account. Let's see if we got the buying power to do it or if I have to close other things. Generally, I think this takes about $400 or $500 of buying power. So we should be fine to do it over here. And this is what, I think experience gets you. You go, oh my gosh, the market's down. Should I sell anything? I'm scared to do it. No, I mean, that's why we have a plan. You've got to have a plan that takes the fear out of it. When there's blood in the streets, we act. That's what we do. So let's go to 49 here. And we did the 44.10, 43.60, 44.10, 43.60, 44.10, 4.10. Yeah, baby. There we go. So we're going to buy this one. Hold your control key down. Do 43.60. Hold the control key down and sell your NECA component of the 1-1-1 trade. We've not had a single loser on the 1-1-1 yet. That's like Chris Collinsworth on a Sunday Night Football saying, well, he has not had a interception yet, and the next thing happens is he gets an interception. Overnight futures, yeah, resulting buyer power for options, $99. We're good. We get filled, and we're filled. So So let's go put him in our groups. I think we're done for that. All right, so here we go. Y'all know I'm gonna have to make my look and feel look smaller because I got so many groups now. Look and feel. Not extra large. We're going to large and then charge. Apply settings. All right, now what am I going to do? Put it in groups. Groups. Show groups. And I love it. I tell you what, I love showing y'all the good, bad, and the ugly. Because what looks ugly is actually good, in my opinion. Now, what do I know? I have no idea. Maybe I'm wrong. Maybe, we're going to blow the whole count up. I don't think we are. I think we're on a really good path. So let's take our TMF MES. And let's put these in 111. Gosh, what are we at now? 58. Group. Add group. 11158. I think that's where we're at. We must be at 59. Sorry. Now we're getting close to 60 of these puppies. 59. That's right. Here we go. 11159. Then it looks like our TMS need to go into their right little thing. So let's put them into the bonds. Move to group. Still bonds. Micro. Oh man, do y'all see it? There it is, the bonds. We'll put those into bonds. So, and every now and then you want to check your spreadsheet to make sure that you got the exact amount of shares, make sure that all your stuff is in here. So we should have 217 TQQs. Oh, I knew there was something I wanted to show y'all. So let's see, where are those? TQQQs. Let me make it big when y'all can see it. I think y'all gonna like what I'm gonna talk to you about. So let's say we're scared to death. We're just scared that we are going to start losing money on our TQ's position. Make sure we got the right amount of stuff first. So where's my TQQs? TQQs. I want to make sure I got the same amount of macros, TQQ, Empire. Where's it at? They said, Bobby, you don't deserve to have the shares. We're going to take them all away from you. Is that what they did? There's the bonds. So we got 368 bonds. That doesn't sound like the same number we had over here, was it? It says 370. Oh my gosh. I got to figure out what I did wrong, right? Because you want to make sure that these things are right. So I got to go back through. I'll go back through and double check and make sure on all those orders. So apparently it says I got 368. So that ain't right. Let's see what we've got on. Now, later this week, our TQs are going to be all messed up because we've got a split. We've got a 2-for-1 split coming. So we've got 217 shares here. Let's see if it says 217 here. Yeah. So come later this week, the split's going to happen, and we're going to be in trouble unless we remember that we got to do a adjustment. And I'll show you how to adjustment when it comes time. So I got to figure out why we're only seeing 370 and only got 368. All right, I'll look through the history of that. All right, what did y'all say? Then I want to show you something that's kind of cool. Sold 5 ES puts this morning, orders for 5 more. That's it, Ken. That's exactly right. So I can't do that because I've got, so if you don't have your black swan hedge and you've got some complete tranches right here, today's the day you start a new tranche. You sell 3 on 0.4 down or more. And I can't because I'm trying to fill these 5 at $1.75. That's currently at $3.40. So I can't sell 3 more because I've got, hopefully this will be filled at some point. All right, so here's what I was going to show you. Let's go back to our see support and resistance of the NASDAQ. Because here's what I wanted to show you too. Yeah, so look, we're overbought for the period below us, right? So if you really think we're overbought, which we're telling us, you would anticipate a move back down into this area, right? So if that were the case and you're afraid that TQQ is going to still keep falling, what would you do? Well, you could always sell some covered calls. Remember, I got 217 shares. I could sell 2 covered calls to make sure I've got income coming into the account. Now, a call, we kind of came up with a thing though over here to tell us when to sell the covered calls. And remember what our plan was, is it's definite that you could sell a covered call if you're in the upper part of the linear regression channel and the RSI was over 70. That would have been a great time. So you sell a covered call, what happens? It goes down. Well, then you sell one here. That worked out well as well, right? For a little bit, then it comes back, and here you could have done it again, actually. Could have sold a covered call. It's above 70 there. It's at the top. Great time to sell a covered call. Now, here doesn't look like a great time to sell a covered call. Why? Because it's down at the 200-day moving average. It looks like it bounced off of that, right? That there's some area of support there. But if you're convinced, if you're just, hey, you're convinced that the price is going to go down, you certainly could sell a covered call on this thing and get you income into the account. So let's see what that looks like. Trade. And you're fearful. Now I'm not fearful because I've got a plan. But let's say you're panicking and you want to do a covered call. What would you do? Well, you could go 11 days out. You could go 46 days out. There's all kind of stuff that you could do, right? Say you just wanted to do it for the next 4 days. I think this week it's definitely going down. Well, look here. You could go right here at the money to kind of stop your bleeding, or you could go, to a 42% probability of money, 38, anywhere here. But you sold an at the money. If you're convinced it's going down, sell 2 of those on your 200 shares. And that's income that you get to keep. You could bring in a credit of $938.90. Isn't that sweet? And what happens though if it blows past your strikes? Well, what you would do is you would lose on your calls, but your shares would be making money. Everybody see how that kind of puts a little damper on maybe some of your losses if you are convinced that it's going to go down to the downside. If I know this thing's going to go down in the next 4 days, I know that we're overbought, sell calls. All right. Say you wanted to go farther out. Let's do the tasty method. Go 45 days out. Look at this, y'all. You could sell 2 of these sweet things. Look at the credit you're getting. Look at this. $2,728. If you are flipped out and you are convinced that it's going down, there's an easy way to get you $3,000 on your shares. Isn't that cool? Any questions on the covered call method of, it's kind of a little insurance policy if you're convinced that it's going down. I'm not. But if it does, I've got Lucello's algo telling me to buy more. But at the same time, I can always sell calls on these things. And the great thing is when this thing does a split, now, option prices and all will change too, but I could sell up to 4 covered calls later this week. I could sell 4 when this thing splits. So it gives you a lot of flexibility. That's why I love this plan. It gives us a lot of flexibility. We try to take the art out of it. We try to make it very mechanical, but there's a little bit of art. So if you're looking at this particular chart, let's go back to the NQ chart because that's the one we use to trade. And you're sitting here going, Bobby, you said, man, that we're overbought. And if we're overbought, that means that we're going to have a move down into the next fair value range. That's what this is telling me, right? Do you trust it? Do you believe it? If that's the case, you can easily sell a call. Now, I'm not going to do it because I like this setup better. I like this setup. This is what I'm looking at. I would rather sell a covered call when we're in the upper third or so of the linear regression channel, and the RSI, the relative strength index, is pretty strong. That just seems like a no-brainer. That's when you sell your calls, right? Get that money in. So right now, I think we've got some support here because it'll look the same on the Q chart, right? Q's looks exactly the same almost. So here's our Q chart. We've got some support down here on the 200-day moving average, and I think that we're probably overdone here with all the nilly-willy selling. But if we're not, we've got a plan. All right, who's got questions on anything? Or maybe you're sitting there thinking, Bobby, I think you're an idiot. You're going to lose your whole account. Okay, let's go ahead. But I think we've got a great plan. I love the plan. I love the flexibility. We can sell calls against our positions. There's just so much we can do. Well, say you didn't want to sell 2 calls. Just say you want to kind of hedge your bet. Well, I'm not sure if it's going to go down or up. Sell one call. Bring in that $1,300 on that 45-day call. Hedge your bet a little bit. At least get that income in. So all different kind of things that we can do. All different kind of things that we can do. So I'm really excited about it. All right, guys. Holly is raising her hand. Yes, Holly.
Hey there. So I've never placed a Sweet Bobby hedge. I've been kind of watching recordings and things, but I think I kind of have analysis paralysis. So one of my things that I think I'm kind of hung up on is, do I put it all on, having 0 right now? Do I put it all on at once, or do I try to step into it a little bit? And then also my other question is, what makes up what you consider a full tranche? Okay,
so an entire tranche is short 3 puts, long 5 puts. So that's one tranche. So if you were short 12 and long 20, that'd be 4 tranches.
So what makes you decide to go to 4? I've heard you say 4. What makes you decide to do 4 versus something else?
Okay, so when I began the campaign, here's how I began it. And let's see if I can do a little drawing on my thingy here. So yeah, that's a very good question. Why did I start with 4 tranches? Well, I like 4 tranches because that gives me 12 shorts and 20 longs. So I am net long 8 puts. Now, the hardest thing to do is after you buy your 4 tranches is to do the next step, and that is on a big down day to sell additional 3 tranches, or additional 3 puts, not tranches. So you've got 4 complete Sweet Bobby hedges. You put them all on all at the same time, right? Cost you a couple grand to do that. You put all your hedges on the same, you're net long 8 points. You get a big move down of 0.4% or greater, which we've got today. And you do what Ken does. And y'all, it's hard to do because you're going, what if the market keeps on going? Well, that's why Ken sold 3 today. So now if you have your net long 8 puts, okay, you sell 3, you're still net long 5 puts. So Holly, that's why I started out with 4, because 4 gives me the flexibility to sell 3 more and to be totally net long in puts.
Holly, that strategy that you're talking about will make it so that you will never be net short on an E-mini put. And that's what the whole point is. You'll never be net short. So if something catastrophic happens, you're going to be riding in the driver's seat, not in the back somewhere being passed around.
Okay. So if I am understanding right, if you're first deploying this, you should put on the full thing, the -3 + 5, I think it was.
Yes.
And then once you have that deployed, then that's when you can start doing just sell the 3 on a down day and then buy the 5 once those get, I think you said, a little juicier in the coming days, hopefully.
Yeah, you're exactly right. So now if you don't have any black swan hedges on today, it is not a day to buy a complete tranche. It's better to buy an entire tranche on an up day. So when the market's up a big day, so let's say it's an overreaction today, the market's down 2% or whatever it is today. And you know how the next day, oftentimes you'll see a nice up in the market. That'd be a great day to put on your 4 tranches.
Okay, perfect. That actually makes more sense. And I think that's what I was getting hung up on and just not wanting to pull the trigger. Okay, that's great. Thank you.
Holly, where are you from? We've never heard from you before. It's awesome to have you here. Where are you from?
I am from Denver, Colorado currently, but I identify Texan.
All right. All right. Great. Well, good to have you with us, Holly. And
Yeah, it's hard for me to catch y'all because usually you are too far in my morning, not quite over my lunch hour, so I don't get to tune in very often. But I watch the recordings once you post them.
Oh, awesome. Well, and remember, we go at 2 Eastern time on Friday, so that's kind of cool when Beth and I go to lunch. So good to have you here, Holly.
Okay, thank you.
Yeah, and remember, all of your decisions on this stuff should be made by the Analyze tab. So the Analyze tab should be able to tell us whether you can stomach another 3 down, like what would happen at a 20% down. So we're always looking at that. But yeah, that's just a great question. Yeah, and so today, if you've already got 4 tranches and you're net long, a lot of these options, go ahead and sell 3 to start your next tranche and then put your GTC order. And don't forget, I have built y'all a nice little calculator for the Sweet Bobby Hedge break even, right? So if you sold them today for 340 and you're going to harvest those when they get down to 20, what can you do your loans for? Remember how to do that? You simply go to data, you go to what if analysis, do the goal seek, and you set cell K2 to a value of 0, so you know where the break even is, by changing cell F2. So set cell K2 to a value of 0 by changing F2. It goes through and does all the work for you and says, hey, you got to buy those loans back at a price of $1.84 to have your hedge on for free. So what this is actually like having your automobile insurance on for free. Now, the question is, what if the market never goes back up? What if you're never able to? Yeah, well, that's why we make those decisions from the Analyze tab. The Analyze tab tells us what we can and cannot do. All right, so let's look at the Analyze tab. We didn't look at it today because I told y'all I'm not going to look at it as much. I'm just going to follow the plan. So let's see what it says here. ES, let's do this really quickly. ES, we'll go to vol step. I go to 4 vol steps. So I go to 4 vol steps. Hold on a second. Yes, babe. 50. We're selling our goats and Beth's asking how much of a deposit we take. And the problem is we always say that we're going to sell them and I end up giving them away because it'll be Devin's teacher that wants to get it, or it'll be somebody, and I always feel bad on them. They'll come pick their goats up and I'll handle the money to them. I'm just a terrible farmer. Oh, what, Beth? I know when Beth says we pay double for hours. I'm just a horrible farmer because they'll come up with their little family and they'll play with our goats. And I go, do I really need that $150? And Beth's like, yes, we need it. All right. So what are we doing here? So let's do price slices. Make sure my price slices are good. Yeah. So let's see what our little thingamajig looks like on a 20% drop. That's where I normally test it. God, this thing, move in, move. I think it's a 20% drop. Slow. So up here, I'm up 62,000, right, on my hedge. If it were to just go down and volatility just popped up huge, so between 40 and 63,000, that's not too good, y'all. I need it stronger. So if I did this portfolio beta weighted, what's it say? I would be down 22,000. So it's not too good, right? And the reason it's not too good is because I've got those naked 3 out there that I've got to buy these 5 to complete it. But worst case scenario, what do I do? Well, worst case scenario is I harvest these at 80 cents and buy these at $3, right? I could easily harvest this. It's going to cost a few extra dollars, but I would make my thing a lot stronger. But based on everything that I'm looking at, I don't foresee a crash. 2% down is nothing. 2% down is nothing. Looking at the skew, looking at our market profile, volume profile, I don't see a crash as being imminent. So I'm real comfortable where my risk is. And if we go down $22,000 in the count, that means TQs are going to go down and I'm going to have signals over here. So can you imagine the poor fool that's trading TQQ today that doesn't have an algorithm? Can you imagine they're going, oh my gosh, this thing is down 7% today. I mean, they're lost, y'all. They're lost, and you and I are not lost. We got the formulas running in the background telling us what to do. So it's really, really, really cool. All right, guys, good fun. I'll probably introduce our Alabama kids into our class at some point and let them be a part. And y'all have a good rest of your day. And I'll see y'all tomorrow.